All right, traders, just a very quick video, end of day video for Wednesday, August 10th. And it's a little bit on the late side because at Tribeca Trade Group, we did a nice webinar today with one of our members who's an excellent trader. And we do these webinars from time to time where we bring on different traders and we go over, some of their practices and their experiences and what they've learned and, their process and the takeaways for that. So we had just about a 2-hour webinar tonight, just discussing that and, mainly swing trading and, sticking with names that you become familiar with that are showing, a different personality than the overall market, which is relative strength. So make sure that if you are not a member that you get involved, right? And become a member at the Tribeca Trade Group. You go right to my Twitter handle and you can click on here and you could be a member. But it's really great. We were talking about how sharing things with the community of traders at Tribeca Trade Group, and this is how you get better and this is how you grow as a trader, which is really important, which is what we're all about. So very nice. I just wanted to go over like the price action in just a couple minutes here in terms of today. And really, I don't want to go over and say, oh, geez, it was, to make a big conclusion out of today's price action, other than, we basically held where, we needed to. I mean, it was a little bit iffy in terms of how the market closed yesterday, a lot of, rewinding back to yesterday, right, and seeing some things kind of, move down a little bit. But, the S&P, we were talking about how it could have went into the 20-day moving average. And if it went into the 20-day moving average, it wasn't going to be the end of the world. And I just wanted to basically say in this video that just being very nimble with trading, right? And not getting too bearish or bullish, right? Perma bull, perma bear, that doesn't really help you in this market. What helps is being very flexible in this market, right? I saw way too many people very good technicians, but I saw the same chart being posted all over the place saying basically, and I heard the term that we got rejected here, right? We got rejected at this level and that's the end of that's the end of the story. When there's a difference between getting rejected and there's a difference, and going back to the downside, or, basically just holding in a level, right? And being patient and waiting for whether that next move is up, down, or somewhere in between. But it's very important to not make these conclusions that, oh my God, we're into a resistance level and that's going to be the end and we're going to go right back to the lows, right? It doesn't work that way. One of the points that I made in the TTG macro video over the weekend is that you may get some type of a sideways market, right? You may see a move back to, starting to, continuing to grind higher, right? You may see a move where we come back and we back check, right? But again, there's a lot of other scenarios than we go back to new highs versus we go back to the lows, right? Could be a lot of in between. And one of the things that I have mentioned and why I thought like that, I didn't think and I don't believe that we're going back to the lows unless something really changes in this market, because there's been a major change in terms of the breadth that's been happening under the hood. And again, price and trend are always number one for me, but I'm always going to do analysis where I'm going to look if there's more participation versus less participation. When the market is moving up and it's on very thin participation, that's a divergence in the market, right? Well, what we've seen over the last couple of weeks is much stronger participation than what we've seen in these other rallies up, right? We never really saw in any of these moves up this year, right? We've never really seen heavy participation where we saw the growth, not just value. Most of what we saw this year was the value stocks really kind of lead the charge. All right. So one day is not a trend, just as I said yesterday. And I think just continuing to be nimble in this market. And if you had a good day, congratulations. But moving forward, right, the way that we want to capitalize on this market is, continuing to making sure that we're locking in gains, right? Because, the PPI report or something else could come out tomorrow and it could have an adverse reaction. But overall, there still appears to be more positives of what we've seen in the last couple of weeks than more negatives, right? So for example, one of the positive things, right, is the US dollar, right? The US dollar broke below the 50-day moving average, right? We know that, looking, and I don't think that there's much disagreement here, but when the US dollar goes up, right, it is a headwind for stocks, right? So the fact that this is coming down, right, is pretty good. Now, again, the picture isn't perfect, and it's usually it just isn't perfect, right? I would have liked to see the bonds rally a little bit more today. They finished down on the day, right, or basically flat. But the other thing that I've said is, it's a little bit different than the dollar relationship. What we want to do is basically, we don't want to see rates go crazy to the upside, which means bond prices go down. We don't want to see bond prices go fast to the downside. So if we hang in here and just go sideways, up, down a little bit, back and forth, that's good enough, for me anyway. And I think that this market can handle that. But if we start to see rates really go up faster, right, or this break down and start breaking below the value area for the month of August and the 50-day moving average, then we probably have a issue or we may have a problem on our hands. Again, nothing's 100% certain, but that's just something that I would like to see. All right. So for now, I think pretty good. If you look at the breadth for the day, right? I was making a joke earlier saying that you're probably going to hear the word breadth thrust, right? It's because we had really good strong breadth today, right? And you could see this using the indicator that I do, which is called the web breadth indicator. And this is nothing all that sophisticated with our indicator. We're just looking at up volume versus down volume. Notice again what happened, back in June is we saw this ugly negative breadth. I don't want to say the C word, capitulation, but it felt like a capitulation because of how bad that down volume was. Bulls like to see breadth thrusts, right? It's confirmation for them. So I'd have to say that this is, it's pretty good, right? To see something like that. And if you look across the sectors and what led for the day, once again, it's the small caps, right? So that's pretty risk on, I think. The small caps were up 2.8%. Also note, the Qs did rally there a little bit at the end of the day, but the S&P really didn't do much after the gap up after the CPI report, right? Really where the heavy lifting happened in terms of the market or where the outperformance was in the small caps and a lot of momentum names. And if you look at sectors, which is the next thing that we do is go, the next level down, which this spreadsheet is a little bit screwed up here. But you could look at the best performers was clean energy, solar stocks, right? Cyber names. The semiconductors were up 4%. This was a chart that I sent out yesterday saying even though, right, that the semis had a down 4% day yesterday, they didn't break any support, right? They didn't break into the value area for the month of August. And I didn't know if we were going to see follow through to the downside, right? But we didn't, right? We held where we needed to yesterday, and we bounced off of that. Now, it doesn't mean that the semis are going to lead, but I think a pretty good sign to see them not really break any major support, which is the 50-day moving average, what I've got highlighted, as well as the top of value, right? And that may change, and that's something that we'll have to monitor. All right. And then other areas of the market that did pretty well. I was actually surprised, but the energy stocks and the material stocks did very well today. So, and copper was up decently, but even something like an Alcoa, right? A Nucor did very well. An ATI, which is out to new highs, right? And also had good earnings. So again, it gets a little bit more interesting and exciting when you've got, not just small areas of the growth stocks, but things like metals and mining and things like energy stocks, which I think are great to participate too, right? And there could be some opportunities. LNG had a nice day today. A couple other names that we're watching too. We were going over this name in the member webinar, but this often happens with names that go up a little bit too far, and let's face it, Valero doubled in the matter of months. So it probably got a little bit too extended, right? And is pulled back, and now it's basing. So, I think Valero will get very interesting if it gets back above the 50-day moving average, right? And there's a whole bunch of other names to go over too, but like I said, I'm going to keep the video short. Guys, have a great night, and I hope to see you as members, right? I did send out today, you could check out like what we're doing in the middle of the day, right? I'm sending out notes to members and some stocks to watch. I sent that out on through Twitter, so you could take a look at that. But that's the only one that I'll send this week for free public use. All right, guys, have a great night. See you tomorrow.